I was horrified when I heard this tax advice that one of my prospective clients were given by an unlicensed tax professional that could have landed them in jail and not through the IRS. My name's Megan and I'm a fractional CFO, and I help small and mid-sized businesses meet their personal and financial goals through sound financial strategies. A prospective client came to me so we could do some cash planning because she wanted to make some significant investments into her business and also purchase a personal residence. And part of my process, whenever I'm setting up a budget or a cash flow forecast for a client that I'm not maintaining the books for, I take a look at their prior 2 to 3 years of tax returns to see if I can see any trends in their business that might not be apparent in their books. And look, I'm all for getting that tax bill as low as possible. And if you get that tax bill as low as possible with non-cash expenses, such as depreciation on real estate, then in general, what I'm about to explain does not apply. Since the client was self-employed and wanted to purchase a home, I knew that the lender was going to use these tax returns. And based on the information on the tax returns, I advised the client that, in my professional opinion, she needed to get with a lender sooner rather than later to see what she would qualify for. In general, lenders will want to see that your business is profitable. And in this situation, the net income on the tax return was very, very low. And when I told the client that, she said, "Oh yeah, I'm not worried about it because my tax preparer said when I get ready to get a home loan, all I have to do is amend the return and pay some of the tax and my income will be higher and I'll qualify for the loan." What? 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 So when we amend a return, what we're saying to the IRS is that we made a mistake, and it happens, and there's absolutely no judgment. I've personally had to amend returns before. It happens. And the problem with this isn't taking the deductions. You should take every deduction that you're entitled to and bring that taxable income as low as you legally can. But if you're amending a return to inflate your income so that you can qualify for a loan and somebody is advising you to do that, I would not go to that person anymore. And how I have my clients approach a situation like this when they're self-employed and they know they're going to be wanting to buy a home for the first time or things of that nature is we get very, very intentional on how we approach the business, what they're spending their money in their business on, and how they're saving for that down payment. In no way should our strategy to qualify for a loan be to amend a tax return in order to qualify, make that income look higher so you can secure that loan. That is very questionable. So if you have any questions for me about this, or if you've been advised to do this, let me know in the comments section, and be sure to head to the top of my page and download my tax toolkit so that you can get on my email list where I share free tax tips all the time.